Welcome back to the channel, everyone. Today I want to talk about how the AMC price is wrong. I want to talk about how some of the key data sources have been compromised and manipulated. And I've also got a huge update for Loopring. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So here we've got a tweet from User of Intellect dispelling some FUD around AMC. We've got a reply from Al from Boston, which says, I made a video about how all of the authoritative data sources have been compromised. They code it in a certain way and run a program that deliberately throws out bad numbers. That's why all of our collective technical analysis and predictions were off. This includes level 2, level 3, volume, the lot. We've also got a reply from Peter Han, the portfolio manager, saying, Ow, you're becoming quite the machine. I pretty much have written off the data for months when I realised that data submissions from brokers were voluntary. So what does Al really mean when he says that the authoritative data sources have been compromised? And how do they code it in a certain way to throw out only bad numbers? Well, if you've watched Al's video, he uses GameStop as a prime example, but the exact same thing can be seen in AMC as well. Some of these big market makers that submit most of the data submit it in troves of data. First, they submit all of the buy orders, which obviously pushes the AMC price upwards, and then later they submit all of the sell orders, which obviously pushes the AMC price downwards. Instead of submitting the data in real time, they basically pick and choose when to submit certain amounts of data. They basically submit all of the buy orders first, racking up the sell orders and putting them to one side, and then submit the sell orders later, crushing the price. Moomoo's biggest ever promotion gives you 5 free stocks valued up to $3,500 each. So I wanted to break down how you can get each and every one of these free stocks. When you open a Moomoo account, you get your first free stock valued up to $3,500. If you deposit any amount, you get the second free stock, also valued up to $3,500. If you deposit $2,000 or more, then you get the final 3 free stocks, also worth up to $3,500 each. So just for signing up and depositing at least $1, you get 2 free stocks. If you can deposit that $2,000, then you get all 5 free stocks. So that's potentially up to $17,500 that you can get just for signing up with Moomoo and making your first deposit. Linked in the description below. So how does that really work? Well, obviously you kind of already know the answer, and it's through the dark pools. I've got Investopedia here with a bit of an explanation. Note that as dark pool participants do not disclose their trading intention to the exchange before execution, there is no order book visible to the public. Trade execution details are only released to the consolidated tape after a delay. So obviously dark pools submit all of those block buy orders, pushing the AMC price up, collecting the block sell orders and putting them to one side for a short moment of time, and then releasing them to the tape after a delay. Then that giant sell order hits the tape, crushing the AMC price and obviously causing more people to then FOMO and panic and place market sell orders to sell all of their shares as well. This obviously then amplifies the problem, causing more and more people to panic and sell, causing a much larger drop in the price than you would have seen if no one panicked and if the orders were released to the tape steadily. This is basically having the problem of creating faked AMC and GameStop data rather than letting natural price action entail and ensue. Time and time again, we've seen AMC grind up over the course of a few weeks, only to get slammed back down over the course of a few days because all of those sell orders have been collected up and released to the tape all at once. It seems commonly that every time we get to around this $42, $43, $45 area, which takes us over the course of a week or two to build up to, it then gets slammed down obviously over the course of a few days. But one thing I have noticed is that it does look like they're running out of steam. First we built up to around the $46 mark, then they obviously dropped us to $29. Then we built our way up to the $52 mark, then they could only push us down to around the $34 mark. Then we built up to around the $44 mark and they could only push us down to around $35. Then we've obviously built up towards the $46 mark and they could only push us down to around $37. The main thing I'm getting at here is that this is not sustainable. Hedgies are having to use more and more and more of their money to push us down less and less and less each time. And as Lou says, AMC is inevitable. Now, I also wanted to talk about some quick due diligence performed by Edward Burchuck, looking at another potential AMC fractal. Edward is looking here pre-January 2021. Actually, specifically, he's looking between January 2020 all the way to January 2021. You can see this blue box around April 2020, which takes us into the yellow circle, the 3 green circles, another blue box, a yellow circle, a red circle, and a red box. If you try and memorize some of these patterns, this is the price action that was happening throughout 2020, just before the 2021 run-up in January. You can see a lot of these patterns happening in 2021 after the June run-up for AMC. You obviously got this action here around August, following into the yellow circle and the 3 green circles. Then the blue box again, the orange circle, the red circle, and soon coming, the red box. This is obviously the price action that's been happening over the last few months between July, August, September, October and November, which looks very, very similar to the price action that we saw throughout 2020, between April 2020 and January 2021. Now, Rico thinks he's found out the reason why. December, June and January are ETF leaps or expirations. Therefore, anyone shorting the ETFs with yearly put options has to reset those put options every December, June and January. Obviously, we know what happened to AMC during the June run-up and the January run-up, so this is predicting a December run-up. Boss Blunt is theorising that this December run-up will coincide with the debt ceiling limit expiring in December. Boss Blunt is expecting the market to tank during the debt ceiling expiry, which will then cause AMC to squeeze. Now, I also wanted to talk about a formal complaint that was made by Citadel to do with a news article. Last week, I published a story regarding a dispute between some retail meme investors and Citadel Securities. The story also covered a related lawsuit. Since that story ran, a federal judge in Florida dismissed that lawsuit. The initial story, however, prompted the following response from Citadel Securities. To the editor. We believe your November 14th article, Why a California Bartender Won't Stop Trolling Citadel's Ken Griffin, failed to highlight a foundational principle of US equity market structure. Specifically, the article neglected to make clear that retail investors have benefited significantly from the competition the SEC catalysed throughout years of thoughtful regulation. Retail brokers are legally required to route retail orders based upon best execution, which obviously we know doesn't happen. Best execution focuses on a retail broker securing the best possible price for its client, as well as faster and more certain execution, among other factors like, stuffing them all through the dark pool. I find it really interesting that Citadel are now going one step further and complaining to news publishers. Citadel are literally doing anything they can to make sure that all media attention focused on them is painting them in a positive light, not in a true light. Citadel are obviously very worried about investors withdrawing cash from Citadel and are therefore trying to get any kind of media attention focused on them positively. I think this just goes to show that as investors we are winning and Citadel are very worried. I also wanted to quickly touch on this tweet from Lou as well. The almost systemic failure or domino broker bankruptcy of GameStop in January is not behind us. It's just called AMC now and it's bigger. Good luck buying those AMC shares back in the thousands when GameStop at $400 almost broke the market. I do agree, and I do think the market would have broken back in January if the buy button wasn't removed. Over the last 11 months, this movement of AMC retail investors has got bigger and bigger and is now far bigger than GameStop ever was back in January. I do think that when the hedgies lose control of AMC, it will break the market because AMC will run far past $100 and $200, therefore causing the squeeze well into the thousands of dollars. At that time, it will simultaneously crash the wider market as well, because all of those hedgies that are shorting AMC are obviously long a lot of other stocks and will be bankrupted and forced to sell off all of their positions. Now, I also wanted to touch on the recent Loopring price action. I first recommended Loopring here to the private Discord around the 40 cent mark and recommended it to you guys on YouTube around the 60 cent mark. Loopring is now trading around the $3.40 area and looks like it's about to have its next leg up over the highs around $3.70. That's almost a 10x return already if you got onto it when I recommended it to the private Discord. Loopring recently cooled off obviously to around the $2.20 area where I added some more, and I think some of the other guys in the Discord also added some more at this area as well. I do think that Loopring will soon be setting new highs over $3.70, and I do think that Loopring and GameStop will shortly be announcing their NFT partnership. We've also had a few Loopring tweets from Andrew Kang. He works at Citadel. I don't know too much about Citadel as it's more in the GameStop area of things, but I do know that it's very, very popular among GameStop investors. Andrew tweeted a while ago, back in April, saying the strongest communities are those that resemble cults. When I noticed cult-like activity, my instinct is to add to positions rather than to sell. And he recently tweeted saying I found another cult, obviously with the Loopring emblem. Obviously we know what happened to a previous similar cult-like following, which was Shiba Inu. The coin went over 1,000,000%. You could also potentially resemble AMC and GameStop followers to a cult-like following as well, and well, AMC's up over 3,000% on the year as well. Therefore, I do think that the Loopring following is getting stronger and stronger and stronger, and larger and larger and larger. Loopring also recently tweeted saying that over $3 billion has been traded on Loopring level 2 with no gas fees. Obviously one of the major advantages to Loopring that will work so well with the GameStop NFT platform is that there's no gas fees or transaction fees associated with Loopring. Guys, be sure to let me know down in the comments below what you think about the AMC price being wrong and the data sources being manipulated. If you haven't already, be sure to sign up to Moomoo to get those 5 free stocks valued up to $3,500 each. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.